All right, well, let's break down some of the biggest takeaways from the Fed's press conference today with Yahoo Finance's Jen Schonberger, who was attending there. So, Jen, what were your big takeaways?
Good afternoon, Rochelle. Fed Chair Powell laying the groundwork to begin slowing down the pace of rate hikes, though he says he believes rates now need to move higher than previously forecast. He says the Fed is going to start talking about potentially slowing the pace of rate hikes at the next couple of meetings, and will have a discussion with other Fed officials at the start of next meeting. Take a listen to the chairman.
I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
And you heard Fed Chair Powell saying that the pace of moderating rate hikes isn't as important as how high they could ultimately take the Fed funds rate. He says the job is not done on inflation. In fact, inflation hasn't come down, and it's pretty much where we were a year ago. He says it's premature to begin thinking about or talking about pausing rate hikes, and that we still need to get to a sufficiently restrictive level on rate hikes. So he doesn't also think that we have over-tightened, or that the Fed has over-tightened at this juncture. And again, the Fed raising rates by 0.75 of a percentage point this afternoon to a new range of 3.75 to 4%. So Fed Chair Powell standing hawkish at this juncture. Back to you.
Certainly sounds hawkish, and that certainly seems like what the markets believe at this point with the losses that we're seeing across the board. The S&P off just around 2% right now. Jen, what stuck out to me was some of the commentary that he made on the labor market, once again reiterating that the labor market is extremely strong at this point, that demand far exceeds supply. And then also consumer spending. When you said consumer spending showing modest growth, fiscal headwinds haven't really restrained spending up until this point, and all that points to a more hawkish Fed in the future.
Yeah, I mean, certainly the Fed chair believes that the job market does remain strong. Pointed to a number of levels there, notably that the unemployment rate remains low, job gains continue. You saw the JOLTS data. And so that really gives the Fed more room to raise rates without causing a deep recession. And he says that he and the other Fed officials are hopeful that cooling the labor market will not mean that we ultimately have layoffs, but more just fewer job openings and those sorts of junctures to try to bring down the level of tightness, as opposed to an outright layoffs that would be akin to what you would have during a recession.
Certainly a ways to go with unemployment rate at a 50-year low. All right, Jen Schonberger, great job. Thanks so much.